Close attention. If you've been watching the charts, you know this is a moment that demands a deeper look. So let's dive right into this and see exactly what the data is telling us. The number of the hour is $61.52. Now, you might be wondering, why does one specific number matter so much? Well, it's really all about trading psychology and, frankly, the machines that run modern markets. The international spot silver price just crossed this massive threshold, hitting right around $61.52 per troy ounce. And when an asset crosses a major round whole number barrier like $61, it literally trips algorithmic trading triggers and alerts retail investors who have their watch lists set to whole numbers. So it's not just a minor blip, it's a remarkably strong move that validates upward momentum. It sparks this fresh wave of excitement because breaking that psychological ceiling essentially gives permission for a whole new class of buyers to enter the fray.
And that explosive breakout brings us directly to the million-dollar, or actually maybe the multi-million-ounce question. Is this the beginning of a much bigger, sustained rally, or could a sharp short-term correction be just around the corner? This sudden, strong upward move is really our inciting incident today. We need to figure out if this momentum actually has the legs to hold its ground, or if financial gravity is about to pull it right back down to earth. To answer that accurately, we can't just skim the headlines. We've got to look at the hard numbers on the ground.
Part 1. Global and regional markets. Prices at a glance.
Looking internationally, silver is showing some really impressive strength across all the primary weight metrics. While we have that big headline figure of $61.52 per troy ounce, breaking it down really highlights the sheer value density at play right now. That single ounce translates to roughly $1.98 per gram, and it's hovering right around $1950 for a full kilogram. Just think about what that means for physical logistics and wealth storage. Whether you're trading in massive institutional blocks, moving literal pallets of kilograms, or dealing in smaller retail gram increments, that surge in value is universally felt and deeply impactful across the entire supply chain.
And this global surge translates fascinatingly at the local level. Zooming into regional bullion markets, we see this exact same momentum directly reflected across borders. In India, silver is currently trading at approximately 240 rupees per gram, meaning a single kilogram will set you back about 240,000 rupees. Meanwhile, over in Pakistan's vibrant bullion market, prices are trading right around 6,402 rupees per tola. Keep in mind, prices always vary a little bit depending on the specific city, bullion quality, and daily exchange rates. But this brilliantly illustrates just how closely connected today's metals market really is. A single ripple on the global spot price creates an immediate, mathematically precise wave in local markets all around the world.
Part 2. What's driving the rally? Uncovering the causes.
So why exactly has silver moved above $61? Markets don't just jump out of nowhere, right? There are always underlying currents, this complex mix of human psychology, raw physical utility, and macroeconomics. Silver is entirely unique because it perfectly straddles two very different worlds, the global financial system and the industrial manufacturing sector. It operates as both money and a critical raw material. To understand the specific forces pushing this metal past such a crucial resistance level right now, market observers are pointing to a really interesting confluence of overlapping factors.
Specifically, they're pointing to a perfect storm of three main drivers: strong investment demand, exceptionally strong industrial demand, and shifting central bank policy expectations. These three pillars, investment hedging, industrial utility, and central bank maneuvering, they aren't just happening in isolation. They are working together simultaneously. It's this exact combination, striking all at once, that is fueling the current upward momentum. Let's break down exactly how each of these pillars is reinforcing the others to push prices higher.
Starting with the first major clue, investment demand. Capital is flowing rapidly into precious metals because investors are actively looking for a traditional safeguard against inflation, broader economic uncertainty, and, of course, stock market volatility. When the economic winds start shifting, money traditionally seeks a safe harbor. We've seen this play out historically time and time again. Think back to the inflationary spikes of the late 1970s, when silver prices famously skyrocketed as fiat currency purchasing power dropped. Silver, much like gold, has historically served as that reliable, tangible store of value. And investors, they're clearly leaning back into that proven strategy right now to aggressively protect their portfolios.
But, silver isn't just sitting idle in a dark vault somewhere. It is a heavily working metal.
We're seeing massive structural demand from the renewable and auto sectors, things like solar panels and electric vehicles colliding head-on with the explosive demand for advanced electronics like the specialized hardware powering artificial intelligence and those high-performance smartphones in our pockets. Silver is an absolutely unparalleled conductor of electricity and heat, so as global infrastructure continues this rapid expansion of renewable energy projects and pushes the extreme boundaries of AI manufacturing, silver is serving as the critical physical bridge making all of this next-gen tech possible. The demand from these combined sectors is literally insatiable, persistent, and growing.
For our third driver, the market is keeping a very close watch on central banks. And this is where things get really fascinating for institutional players. Investors are just glued to expectations surrounding central bank policies. Why? Because any subtle sign of slower interest rate increases or any data showing improving inflation trends instantly shifts the math of global finance. It all comes down to opportunity costs. When interest rates are lower, the opportunity cost of holding a non-yielding physical asset like silver drops dramatically. Suddenly, holding metal becomes way more attractive to institutional buyers than just parking cash in a low-yield bond. It's a macroeconomic pivot that changes everything.
Part 3. Looking ahead, the road to 65. The target currently dominating the conversation on trading floors right now is $65 per ounce. While no one can predict financial markets with absolute certainty, breaking through important resistance levels, like that 61 mark we just talked about, often acts like a massive psychological magnet. It attracts additional market attention from momentum traders and large institutional investors who only jump in when a trend is fully confirmed. This momentum naturally creates a powerful snowball effect. As buying begets more buying, it leads a lot of veteran analysts to wonder if $65 per ounce isn't just a hopeful guess, but the absolute next logical ceiling we are guaranteed to test.
However, we've got to stay grounded in objective analysis here. Markets rarely move in a straight line. After incredibly strong, steep rallies, short-term profit-taking is totally common and actually quite healthy for a market. Traders who bought in lower will naturally want to cash out some of their gains, and this entirely predictable selling pressure can cause temporary pullbacks before the overall macroeconomic trend resumes. So the crucial point to remember is this. Experienced, long-term investors focus on the underlying market fundamentals we just covered, rather than panicking or overreacting to every single daily price fluctuation on the chart.
If you want to anticipate that next movement, here is the dashboard you need to monitor over the coming days. You've got to watch U.S. inflation reports and Federal Reserve policy updates as they directly impact the strength of the U.S. dollar. For instance, if inflation comes in lower than expected, well then the dollar might weaken, which historically pushes silver prices even higher. You also have to monitor the pulse of global economic growth, which feeds right into that industrial demand from the solar and electric vehicle industries we mentioned. And finally, keep a close eye on broad geopolitical developments that can instantly shift global investor sentiment. These are the real-time actionable levers determining our trajectory. Which brings us to the end of our analysis. The combination of surging industrial demand, renewed investor interest as an inflation hedge, and shifting global economic policy is definitely keeping silver firmly in the spotlight right now. But take everything we've looked at today, the robust global prices, the dual demand from heavy industry and AI hardware, and the central bank watch, and ask yourself this: are we simply looking at a typical short